What the offer?
Good, I'm good, I'm good, I'm good. How are you? It's been a few days, weeks since our last recording.
Yeah, it's been, I want to say, maybe 3 weeks. Maybe 3 weeks. So, I mean, we're going to figure
Like
out the
just
schedule.
finding time, yeah,
We're going to figure out the
finding
schedule.
time to, we have to actually make it very defined so that it's just not all over the place. And also, you need to, work with your internet service provider.
See, I mean,
No
Nigerian
shade.
network service. See, it is big shade, MTN, Airtel. You know what's interesting, right? Using this Riverside to record and upload. At
Mhm.
the end of our last episode, your upload went from like 90, like 97, 98, done, complete. I had to
Mhm.
keep my own overnight.
Oh my
MTN
god.
5G. I don't know.
But I thought that we are past all of these issues now. Eh?
Baba, we are
Now that
not
I
past
even
it.
hear they've increased like their subscription plans, pricing, and still the service they are providing is so subpar.
I mean, they had
Who
to
knows what's
increase it
happening?
because they've kept it for so long, and the cost of running business in Nigeria is not what you remember. I
Yeah,
mean,
that's
the naira dollar exchange rates, they have to pay their international service providers. They also have service providers that they have to pay in USD. Add to the fact that there's no power really,
mm,
and they have to keep buying diesels to run this network tours.
yeah. Yeah, I
And
understand with people
I also heard that they are big victims of vandalism. Like people go there and just try to bush out towers and sell
destroy
parts.
their locations. My
We
God.
are very
My
interesting
God.
people in Nigeria. So I mean, it's a lot. They have to, even that 50% that was approved for them by the, is it NCC? I think it is small. I think it
Yes.
is small. I think it is small. Also, I
But
think
you're
Nigeria.
talking
What I've been
because
thinking about. Yeah, yeah, I
you're talking from
understand. Privilege.
privilege.
I'm a
Oh.
privileged
Please,
man.
small.
But one thing I've been thinking about with this NCC regulation is like we have to decide. Like I'm thinking about it lately. Like we have to decide the kind of country that we want in Nigeria. Are we going to be a free market where we have competitors that set the prices, or we have the regulators just take the prices, then we just follow along? I don't know. We have to have that honest conversation with
Yeah.
ourselves where we want to go.
Like I think in most free markets, like it's a mix because you want the regulators to always,
Yeah,
to have an
they have to
input
be in the
to
mix.
ensure that consumers are, their rights are protected and things like that, and there's no price gouging or just unfair practices. But yeah, in terms of like price determination, it should be a free market decision. If
That
we're
point on
going
having
fully
regulators
capitalism
is
mode.
key actually because you could have a situation where the service providers are in codes and you have Glow, MTN, and Airtel, they come together and say, we're going to charge 1,000 naira per minute and nobody can do anything about it.
Exactly.
So, yeah, it's key to
Collusion.
have the regulators in that regard. Yeah, so, everybody, what are we talking
Mhm.
about this week on Chasing the Bag Pod with Bade and Biyi?
Yeah, I think we're talking about the basics of the stock markets. Just do some sort of primer on all the different basic terminologies, what it's about, the different options available to people, so that people can just this kind of like, it's a foundational class, so to speak, or a foundational chart, so that our people can then build up from here, and we can build off like subsequent episodes based off of this foundation that we've set today.
Yeah, we don't want people to get lost in terminologies that we drop on here. Shout out! I want to give a shout out to my guy Ayobami. He listened to the whole episode, last episode, and he asked the question about the S&P 500, basically what it is and just how to go about investing. I've also had some questions, from people wanting to know about
Mhm.
how to invest in blue chip American stocks from Nigeria. You and I, we are privy to information or we know about apps like Bamboo, Trove, Shaka, and the likes. But
Mhm.
you will
Chaka.
find out that
Yeah.
quite a number of people have zero knowledge or close to zero knowledge about this. And like I said in the last episode, that's why we do the podcast to kind of share knowledge on things that we know.
So we can
So,
help people just take advantage of
mhm.
opportunities as well.
And thanks to everyone who listened to the last episode. Don't forget to subscribe to the Chasing the Bag pod with Bade and Biyi page on YouTube. Rank us and subscribe on Apple Podcasts, Spotify, or wherever you get your podcast. We really appreciate the follows. And if you have any kind of questions, comments, send us a message on our Instagram
Mhm.
page at Chasing the Bag Pod, and we'll be sure to probably answer it in the next episode. So without
Yes, we're
further
always
ado,
open. Just let us know.
mhm.
Let's get into it.
So, Ibadi, how would you define stock investing?
Well, so I can start, let me just start with like the stock markets. So
Mhm.
just like you have the markets for like everything. So if you want to buy your basic goods and services, let's say you have platforms like Amazon who sell different types of goods from bags to shoes to electronic devices, everything that you can get, so to speak. You have like a market for trading securities or stocks of companies. And stock markets is essentially like that marketplace where you can buy and sell these securities or these stocks of different companies that are listed. So I think I've made a lot of technical terms there. One is I think is listing, and
Even stocks,
typically listing
like
is
what
just
stocks are.
stock, yeah, okay, yeah. Starting from what is stock. So it's like a stock is a unit of ownership in a business entity, essentially. So it's just imagine a company, let's say uh, Amazon was
Mhm.
a big, very big Apple, and they cut Amazon up into like maybe 100 different pieces. A stock is one unit of Amazon's ownership. So for you who will be buying that stock, you an owner and you can participate in the activities of the company. You get to vote as a stockholder. You get to determine decisions that the company takes. And yeah, and for public companies, we have everyone has the ability to participate in their ownership of their stocks or shares.
Yeah.
A lot of these companies go through very rigorous processes to ensure that they are listed, so that everything, all the information required for an average person, a retail investor, which is someone like me and you, who is not an institutional investor or an organization, has all the information we need to make a decision, buy or sell decision. So, and the process of going through the requirements of whichever exchange you want to list on is what is called listing. So you provide all the different information about everything about the company, your financials, all your day-to-day director information, everything essentially, all the different information pieces that would an average person would need to know is what you'd have to provide to be listed on one of these exchanges. So an exchange,
Yeah.
I mean, that's another technical term. It's like a platform where public companies can put their, just think of it as some sort of like
Where
a
they sell their stock.
list or a play. Yes, where you can buy and sell those stocks, and they are different. So the biggest one globally that everyone knows is the New York Stock Exchange. There are also different other ones. So
You
yeah,
know,
B,
the
what's
way
yeah,
I was thinking about this, like stock exchange, stock market, stock trading. I just look at it like a market, like Oja, like going
yeah,
to like Lagos Island, right? So that
mhm,
is where, and it is buying and selling regular. I mean, in the most basic terms, just buying and selling. Of course, investment decisions are based on a few things, but it is basically a place, if you will, where you can go and buy and sell
mhm.
pieces of a company. And the different exchanges, would be like different shopping complexes,
Yeah,
right? So this is
yes,
where Uche and Sons have their business. So that is where you go to buy Uchi and Sons things, or you go and buy and sell Uchi and Sons goods. Then the other complex at the other
Yeah.
side is where B and Bade have their podcast equipment store, and you go there and buy and
Yeah.
sell what that is. So, I mean, in the most basic terms, I think that is what it is. The main upside I see into
Mhm.
stock investing, because we'll go into like what the difference is between stock investing and stock trading. Because I think, I
Mhm.
mean, in the active sense, there's a huge difference in that. But what was I even saying?
Yeah.
Yeah, in the basic sense, it's just an avenue for you to have or partake in the growth of companies. So when you buy,
Mhm.
you make
Mhm.
this buy decisions, you invest in them for the long term. As they rise or they increase in value, the value of the stock that you own also goes up. Or as they make money, they
Yes.
get to give you a part of it, which is what they call dividend.
Evidence. Yes. Yes. Absolutely. I think you rightly put it. As you were talking about different, I was just thinking of if you are on this side of the world, let's say you go to Walmart or you go to Trader Joe's
Right.
or you go to ShopRite in Nigeria, and you have different, so you have different wholesalers or producers have their wares on on those different stores, but it's the same. It's the same. What you say where. So let's say you want to get cereal, you can get cereal from ShopRite, you can also get it from Walmart, or you can get it from you know Ebano in Lekki, Nigeria. So you have those platforms that place those stocks in their own
Exchanges.
stores that
They
you
put it
can
in their
buy
own
from.
stores.
So and the exchanges are those stores that you can essentially can buy from.
Right. So, like you said, this is kind of like a beginner's class. So, if you want to begin today, buddy, how would you start? You have quite a bit of knowledge, but how would you say someone should start, or how would you start today with stock investing? What are the basics that you think people should know?
Yeah, so I think for stock investing, so there are two major things: your ability to buy and sell. So once you start from that, very basic. So you buy a percentage or a unit in a company, or you can sell it on whichever platform you decide to. Then there are then different positions that you could take. So when you are buying to hold for a long time, like if you are going long the stock, is with like you want to buy and you just want to hold it. You want to do anything about it. You don't care about the price movement. You're buying to keep for, let's say, I don't know, 12 months
Yeah.
list to see whatever dividends you get in a year. And at the end of the year, if you say you still want to hold, you can hold. If you want to sell, you sell. If I am to do it at the beginning, yeah, I'll just test by buying a few of the companies that you like, that you think are doing well and you will do well into the future, because that's the most important aspect of investing in stocks. Especially if you are buying to hold, is that you see that the value of the company in the future is going to be higher than what it is today. And whatever facts or metrics you are using to make that decision, you must
Yeah.
know them very clearly. Is it that you think that, oh, they are developing great products, so for Apple, and they're developing great products, you yourself, you're looking forward to maybe their next iPhone, and you'll be buying, and you know other people that will be buying, so you know indeed next year or in the next release they will make more money. And yeah, or let's say you want to yeah, so that's it for buying essentially.
Yeah. I think you've just explained what stock investing is in detail. What stock investing is really like buying a piece of a company in in hopes or in anticipation. Preferably you've done some sort of analysis or you have something to back your judgments. So it's not just based off a whim. Maybe you've
Yes.
looked at their share prices in the past or you've read through their financial statements. So this is a beginner, whatever.
Mhm.
But and as we'll discuss as we progress, you'll find out that I am not the biggest fan of stock picking. I'm more of an ETF guy, but we'll talk about that later on. But yeah, preferably you have some sort of data
Yeah.
or to back your judgment into your buying decision, and it's not just based off a whim. So that's basically is what stock investing is: buying, holding. It could be in anticipation of getting paid from the dividends that they offer, that the company offers. Apple, for instance, Apple is
Mm-hmm.
a dividend stock. They do pay dividends. Last year, I think they pay about 25 cents each quarter for each stock that you own. So, and also it's also a growth stock. It's one that has appreciated a lot over the past couple of years. So you get
Yeah.
to
Yes.
profit in two ways: getting paid off the dividends because you are
Mm-hmm.
part owner of the company, and when they make profits, they share the profits. Then also
For
with the
everyone.
increasing value of the company, you're also getting paid off that. So basically, that's what stock investing investing is.
Is yeah, some people might ask why, or I think we'll still go into that, like why do people invest in stocks? One thing that a lot of people don't know, like people that are not so conversant in the finance world, is most very great stocks have the potential of beating inflation. You want your funds in an asset that beats inflation. And what is inflation? In simple terms, it's just persistent rise in the price level of goods and services. Just like what B and I
Yeah,
said earlier on about how MTN has, increased the price of their
yeah,
subscription.
tariffs.
It's right in Nigeria right now. We've seen
Yo,
a rapid rise in like price
every
level of goods like food, groceries, things that you need at home, transportation.
every
So
Nigerian,
you see
maybe
that
you
inflation
don't know
has
what's the
crept
technical.
into, and what happens is when you don't,
Yeah, like you might not know what the technical definition is, but you know inflation
them,
somehow.
what's that?
It's more expensive now. Inflation, now inflation, now inflation, now inflation. So it's more
Exactly.
expensive now. It's more expensive now. I mean, the laptop that I bought
So that's what's
in
happening.
2019, I bought it for,
Mhm.
I can't remember what's the exact prices, but I'm trying to sell it this year and I'm going to sell it for maybe 50,000 naira less. It is not like it has appreciated. It's just like, inflation, things are more expensive. So my Tokumbo from 5 years ago
Yeah,
is going for near the price that I
expensive
bought it from.
now.
That's just what
Yes, I
things
think
are
someone
now.
said that on Twitter as well. Like, especially for Toyota cars in Nigeria, they bought a car, used it for like 3 years, and sold it for like higher than the price that they got it from like 3 years ago. So you have that, and what happens is the value of the money, yeah, that you hold. Mhm. So to beat inflation, and yeah, also based off of historical data, like we've seen that the S&P more specifically, and
Hold on.
I think the Nigerian Stock Exchange.
What is the S&P before we veer off?
Yeah,
Because that's one
so
question that I've gotten a bit.
S&P is just, so the full meaning is Standard and Poor's. It's a rating agency, and they have this index, which is like a basket of stocks that they put together. So it's kind of like a list of different stocks, or 500 best performing stocks according to them, that they put in a basket. So, and when you buy that index, you buy a portion of all of the stocks in the index. That's essentially what the S&P 500 is. And the reason why people do it is you're kind of buying one the best of the market.
The rest of the
One, you're
best.
essentially buying the market. Yeah, exactly. Which means that you would not be affected a lot by downside risk of reduction in the share price of just one stock. So an alternative is, if you want to buy just one stock, if that stock goes down, you experience devaluation of your investment, very much so. But for a basket, some will go up, some will go down. When you weigh everything on a weighted basis, you see that you're still performing well. And for the
Yeah, it
S&P, for
balances
the
out
past, I
well.
don't know, 20, 30 years, it's returned about 8 to 10% on average, which is why it's kind of like the go-to for everyone and
I
for most
mean,
people.
last year the S&P 500 returned about 22%. it's and a lot of
Wow.
people rode on riding off the tailwinds of companies like Palantir, Nvidia, and a couple others that really
Nvidia.
performed
Uh-huh.
ridiculously, for lack of a better word. And one of the upsides of, like you said, for S&P 500, investing in the S&P 500 is having that diversification. So you get exposure to a
Mhm.
lot of industries, not
Yeah.
just technology or consumer goods. You get, you know, exposure to energy and just all the industries in one, or the 500 top biggest
Utilities,
companies.
healthcare,
Yeah, you
biotech.
just get that
Yeah.
exposure, and like you said, it is, if it has not beaten inflation, it has, just stayed right about. So people have not really lost money in being in the markets, and it has proven itself time and time again with even active fund managers not beating that index consistently. So
Exactly.
it's just a beautiful thing to invest
Mhm.
in. And how would you invest in the S&P 500 for beginners? By the If you're in Nigeria today,
So because I've used some of the platforms that
I
provide
think we can name
access
them. Let's just name them. Although they
to
are not
the S.
paying us, but let's
Let's
just
just
name
name
them.
them. So they're not paying us, but the very best that I have used and I've had a great experience with Bamboo. I started using them like maybe how many years ago? 3, 4 years ago, and they've been top
Maybe
notch.
more.
Like
Right.
there's been there's been no issues with respect to access to funds or anything like that. You can see everything is very transparent. I think they did a good job in managing their risk, and they're actually really growing. So that's one that I know that I've personally
hmm
used. I
And I
hear a
like
lot
that
of
they have
people
a
talk
variety.
say good things about Right First.
They have
Yes, you're
like,
saying me.
even so, sometimes I do some research, or I get to find out about, some niche companies, or maybe in real estate, and I do my search. I'm like, okay, do is this on Bamboo? Because I know that they don't have
You see,
all
everything is on
all the
Bamboo. So
companies. I just find out that it is on Bamboo. They basically have everything, which is, props to them. They've done a good job. So I was looking at, I don't know,
yeah.
I
So
think was it one company that I found out, Realty, is it Realty Income, something like that, is a company that has paid monthly dividends to holders of the stock for years now, decades maybe, that they've paid monthly dividends to
wow.
holders of the stock. And I was just, it piqued my interest. Their ticker symbol on the stock exchange is just letter O. So I just went on Bamboo, and lo and behold, they were right there on Bamboo.
Oh, okay. What is the ticker symbol?
Okay, ticker symbol, all right.
You just put
Another,
the technical thing.
right. So yeah, it is a unique identifier for companies that are listed on exchanges. So unique identifier,
Mhm.
it is like an abbreviation, or mostly, or let me say, a lot of them use kind of an abbreviation of the company name. So you might see Google or Alphabets,
Name.
they are, so you might see GOOG. I believe that's how they are listed on the stock exchange. Or Apple, I believe Apple
Mhm.
is AAPL.
That's Google, yeah.
Right, yeah.
Yes,
Then,
AAPL.
so it's just like a unique
Microsoft
identifier.
is MSF.
Right? Microsoft is MSFT. So two companies don't share the same ticker symbol, so that it's not confusing
Just
to investors. So that's the unique identifier. So that's what the ticker symbol is.
one funny thing is when Meta was changing, when they changed their name and they were changing their ticker symbol from FB. So yeah, so a lot of people it got some adjusting, and yeah, it was yeah they had to do a lot of awareness and marketing so that people will know. Even though it's not relatively that difficult to
Right.
get to buy, but yeah, that's just one change that happened that was a bit
Right.
interesting. Let's not go about the name change right now.
So talking about the S&P 500. So investing in the S&P 500, how do you invest in the S&P 500, or how do you get an exposure to this 500 companies.
How do you invest in the S&P 500? So exactly, okay, then yeah, how do you invest? So there's the index, and there are brokers that have their own kind of their own products that mirrors the S&P 500. So Vanguard, for instance, so Vanguard is a big asset manager. They're like one of the biggest globally. There's they have the S&P 500. I think it's what's the
VOO,
name of that? I think it's VOO. Yes, VOO.
right?
Fidelity also has theirs. So you have all these uh
Yeah, there's also the one
different asset
from State
managers.
Street. So you might hear Spider. So it's
Yeah.
called
Yeah, I think Fidelity's own is
SPDR,
FXAIX or something like that.
right? And these
Yeah,
are
Spider. I know. Yeah, I know Spider.
ETFs, which brings us to ETFs.
Yeah, exactly. So what are ETFs be? From their name, exchange traded funds.
Right, right. So they are exchange traded funds. So I like to look at it just like the S&P 500 example, where a group of companies are brought together such that you
Mm-hmm.
get exposure to all the companies in that basket. So exchange traded funds are developed or they by these fund managers that we've mentioned, like the Vanguard or the State Streets or the Fidelity, right? And they, with their knowledge, they have wealth of experience investing, blah blah blah. They are managing huge amounts of money. So they've invested in analysts, in research, and they've put together a lot of these exchange traded funds that all of us retail investors, which is you and I, get exposure to. So you can find ETFs if you are someone that
Exactly.
is bullish on the renewable energy sector, for example. You can find ETFs that constitutes of companies just in that sector. So you can find an ETF that has maybe
Yeah.
the top 25 companies in the sustainability space or the renewable energy space and invest in that ETF if that is something that you are bullish on.
Yes.
Or you can find right now, if you are bullish on cryptocurrency, I know that a couple of them they have this Bitcoin ETF where if you don't have access to crypto exchanges or you are more comfortable investing through a traditional
ETF. Yeah.
fund manager, you can invest in crypto using the Bitcoin ETF. And there's just a lot of them. I've been exploring the energy ETF from Vanguard this year, going by the promises of the Trump administration, and it has not gone anywhere.
Yeah.
I've looked at it like 3 times, thinking maybe it is something worth investing money in, maybe sometime down the line this year, and it hasn't moved a bit. So yeah, so that's just what ETFs are. There are a lot of
Yeah.
them, and the upside or the pro for is just the diversification, right? We don't have knowledge of the future. We can't see into the future. So you just have that exposure to say, if five of these companies end up going, I don't know, 5x in the future. I
Mm-hmm.
mean, hardly anybody could have predicted what happened with Nvidia the past 2 years or what
Yeah.
happened with Palantir, right? But if you have exposure to the S&P 500, for example, you get to
Yes.
ride, off the wave and just profit off that. So that's what ETFs are.
Absolutely. So I think another yeah, that's really important. It's really important to like diversify, especially for retail investors. You can't afford to take very concentrated bets. So concentrated means when all of your funds are in one particular company or particular stock, because what would happen is you can experience a lot of devaluation in your investments just by any win. So for example, I think very recently Nvidia experienced a massive sell-off. I think was it 2 weeks ago? Yeah,
Right, right.
due to
About 2 weeks ago.
there was the deep seek. Yeah, and a lot of people had like positioned themselves, in Nvidia, hoping that to just keep going higher into the future, and they just experienced what we call a correction. So that news really wiped off some billions of dollars from their market capitalization, and yeah, it affected the share price. I think
Another term
I've
to
used
look
some
at,
terms there.
market capitalization, right? But just to, before you go into
Yeah.
what market capitalization is,
So
it is very important, the diversification aspect. I just remembered, you don't know what can happen with a company, right? They could pivot their messaging or their products into somewhere or into a direction that consumers are not comfortable with. It is something that happened last year with, is it Heinz-Busch, the owners of the Bud Light beer, and with the campaign that
yeah,
they went for, you had a
yeah,
lot of,
AB InBev.
yeah, AB InBev, and you had a lot of their core consumers revolting basically against the company.
Mhm.
Saw a drop in the share price, and they had to
Yeah.
rework their steps such that, so if you had, for example, exposure only
Yes.
to AB InBev shares, in that case you lose. But if you are exposed to the market in general, say you had an ETF that was tracking alcoholic beverages, I don't know if there is one, but if you had investments in that, you get to profit, because a lot of people moved away from is it Budweiser or Bud Light, and moved to other beers. So basically, you get to profit off both ends in that scenario. So, Badi, you can go on to what market capitalization is.
Yeah, yeah, yeah. That's really interesting. Like on the bear market. Yeah. So for market capitalization essentially is the total value of a company's outstanding shares. So and what I mean as outstanding shares, that's another term. It means all the shares in the company that are currently held by shareholders. So all different shares that are held by people. That's what the market cap is. And you can also use the market cap to get the share price, essentially. You know, number of shares outstanding, and so we essentially that's market capitalization. And for how you get that, you multiply the current share price by the outstanding shares. So
Right.
if this is the share price of Apple stock, and you know this is the total number of share outstanding, once you multiply those two together, you get what the market capitalization or market cap in short will be. You can easily get what the current share price is by a Google search. You can get the current share outstanding by looking at like their current maybe S1. So that's like when the company files their maybe quarterly reports, you see everything in the financial statements. So that's that's it essentially.
You might have heard Apple is worth 3 trillion. So that's their market cap that people refer to when, oh, Apple is
Okay.
worth blah blah blah. Tesla is worth, I don't know what they are worth right now, but yeah. So that's what they refer to when, that it is market cap that they refer to when they say, oh, they're just worth blah blah blah. So I mean, what else to
Yeah.
touch on? You mentioned listing, and I think you did a good job with that explanation. So on IPOs, right? That's what they call. Can you explain what IPOs are? Initial public offerings.
So an IPO, like you said, is an initial public offering. Is the first time that a private company's shares are available for purchase, buying and selling by the public. So typically that process involves the company, meeting all the requirements of the exchange, publishing sending all the information, every nitty-gritty detail about their operations, their financials, their directors, everything about the company, and then they can make that available to the public. And the reason why companies, go public or list their shares or do an IPO is just to get more source of liquidity of capital to run the business. So they've typically, if it's a private company, the people who fund the operations are the owners. So it's just the private owners, be it institutional investors or private people who just invest in that company. But when you then go public, you are trying to get more capital, influx of capital from a wider range of people. So because there are more people that have access to buying the stock. So it helps
Right.
them to just get capital from the public.
Right. So they are raising funds
Essentially.
in a way by selling parts of their shares to the public. And a private company could be,
Yes.
private companies, B and Bade, we come together tomorrow and say, oh, we are starting a company and we register it and we start doing our business. And there are a lot of
Exactly.
regulations that we don't have to stick to because we are a private company. We choose to run it by on our own terms. And
Mm-hmm.
when a company decides to go public and have an IPO and list on any of the exchanges, they have this set rules and regulations or that they have to conform to for them to be listed as a
Yes.
public company. And once they are public, they are available to the public. People from outside can now participate of the earnings of the company. So if it goes up, people from
Mm-hmm.
outside, anybody who buys the company stock gets the profits of that. If we make money as a Biyi Badi company, PLC, everybody else, outside that has bought the stock gets the profits as well. So we've touched
Yeah.
on a couple things. So when you are investing in stock, by the way, what are some things that you well, I think we've touched on things to look at, but what are some things that you say to avoid?
Yeah. So one thing you want to avoid is don't buy stock because everybody's buying it. I think that's so one, you need to develop your own conviction. So there's an acronym DYOR, do your own research to ensure that
Right.
you know what you're buying to the best of your ability because so you look through so you don't want to buy because everyone is buying. That's even the wrongest time to buy, in my opinion. So you want to develop your own personal conviction for why you are deciding to. It's just like you want to buy something. It's like think of it, say stock is an asset. You get it's like you're buying a
Yeah.
farm or you're buying livestock or you're buying a car, for instance, even though a car is a depreciating asset. So you need to ensure that you check everything that is within the car. I mean, what's the mileage on this car? Has it been involved in any accident? Does the brake work? How is the fuel efficiency like? Everything that you typically do, or what you call due diligence, when you
Mm-hmm.
want to buy anything, when you want to buy a phone, like you check, oh, the seller, are they accredited? Are they credible? Do they get it from the right supplier? Or if you're buying it on the secondary market, how long have you been using it? Is it from the right source? All the different checks that you do, you need to do it on the stock as well. So you don't just like you don't make a decision to get something based off of everyone is doing it. You don't want to do that as well. That's kind of like number one no of like investing in general. So you want to ensure that you've done your research to the best of your ability.
I mean, as much as the stock exchange or the stock market is a wealth maker in a sense, people have lost money too, or people lose money a lot of the time. And you don't
Yes,
want, if you're going to lose money, you want that to be off your own decisions, right? So you don't want it to be based on what you just read off the internet
absolutely.
or what Biya and Bade told you because they are not financial advisors. So,
Bade and
so
Biyi
one
told you.
thing, because we are not financial advisors, and one of the greatest investors of all time, Warren Buffett, is first two rules of investing: don't lose money, rule one, and rule two. Look at rule number
Lose
one,
money. Look at
and look at rule
one.
number. I mean, if I'm going to talk about things to avoid, there would be not
Mm-hmm.
diversifying, and I think we already touched on that. So you don't want to just have your hand stuck in with a company that is going downwards or that goes downwards. You want to have an exposure
Yeah.
to a wide variety of companies. Then also one thing with especially when you are
Mm-hmm.
investing in Nigeria is one thing that I'm always or that I try to be conversant about is with fees and exchange rates. So, I mean, these companies, they have
Yeah.
to, of course,
Yeah, that's very
source the
important.
dollar, but at times you might see that the difference between the amounts that this companies, maybe Bamboo, Trove, or whatever company that you choose or app that you choose to trade with, you might find out that the amounts they are offering the dollar because typically or I haven't really seen. I think Bamboo has that option actually, where you can fund your accounts straight from your dollar card. I will have to check that
Yes.
to know that. Yeah, okay.
So I
So,
think
but if you are
they
funding
have
with,
a
if you are
USD
funding,
wallet.
okay, for a fee, I believe when you are bringing money in. So if you are funding with naira, for example, you just want to check that exchange rate so that maybe 200 naira to the exchange rates might be too much. And I've seen a couple companies go crazy with the exchange rates when they are with their dollar investments. So and that is not just for stock trading apps, even the ones where you don't trade stocks, your piggy bank, your and the likes, your cowrywise that have dollar investments. Just take a look and see that the exchange rates that they're offering you is just not, I mean, makes sense before you invest. So yeah, not diversifying and fees and also not doing your own
Ridiculous.
research.
Yeah.
So, Bade, before we come to the end of the podcast, we've touched on a few things. I want to do like a quick round. I have some terms here, and maybe you can do like a
Mm-hmm.
1 minute explanation of what they are. You said something about correction, like a correction in the markets. What is a correction in the markets?
A market correction is essentially a temporary like decline in the price of like a stock of for a company. So what it means is that that stock has gone to like its all-time highs or very recent highs. So for example, Nvidia was trading really, really high as at the end of last year. And what we experienced like 2 weeks ago is what you could call a correction. So it's kind of taking it back to, and what happens is when it's really high, it means that a lot of people are very bullish.
Mm-hmm.
The term bullish means that they are really excited about the prospects of this future, of this company's future. So they are buying a lot of the company shares, which is taking the price very high. So when a correction happens, it kind of just stabilizes it back. Like everyone is back to kind of base, and corrections, they have like their different levels. It could be 5, could be 10, it could be 20, depending. It could last for as long as a few days to a few months. And yeah, that's what a correction essentially is. And sometimes for very savvy investors, corrections are opportunities for them to load up
To
on
buy, right?
the stock of the company at very decent prices, that is not just based off of euphoria, market euphoria. Because like we
Mm-hmm.
said in the on the last call, the stock market, the short term is a voting machine. So everyone is going off of the market sentiment or the sentiment of every other person that is playing. But in the long term, is a weighing machine. So you see that short term high will come back, and you get stabilization in the price, which can let someone that is very interested, still interested in the stock, to buy at that point.
Beautiful.
Yeah.
Yeah. Just to add, one of the things to avoid would be making investment decisions off of emotions. So you can see, I think one thing that probably
Mm.
happened with Nvidia, the correction is, a lot of people just following what other people are doing, like, oh, it's going down. So I'm going to sell. And
Doing
yeah, and you can never time the markets. That's one thing to note, that you can never time the markets. You don't know when it is at
can
the
never.
bottom. You don't know when it's at the top. That's why investors say it is always good to be in the market. So because in the long term, it has proven that it's always, or I
Yes.
mean, goes to the top. So yeah, so that's what a correction is. So you said bullish on. So can you explain what being bullish and being okay? You explain what being bullish is. The opposite of that is being bearish. So or a bull market
Mhm.
or a bear market. So what is that?
Yes. So it's essentially from like bull and bear market. So in a bull market, there's optimism, like the prices are rising and rising. You see a lot of increases, you see surge in the economy. There's a lot of capital going into all these high risk assets. In a bear market, there's pessimism, like prices are falling. People, what's happening is that the sentiment, market sentiment is that people expect that prices will go down. So
Mm-hmm.
they will be participating, they will be buying shares, and they will be selling as well. So when you say someone is bullish or the market is bullish, it means that there's excitement, there's optimism. When it's bearish, there's pessimism. everyone is not in a great mood about the stock market.
Okay, awesome. So I think that is where we're talking about quite a few things: stock markets, stock exchange, stock investing, stock trading. Okay, stock investing versus stock trading. In the last episode, we said something about
Yes.
day traders losing. I mean, 90% of day traders being linked with a losing history. So stock trading, I would just, this is a personal preference, like not to trade
Yes.
stocks actively if you are not experienced or if you don't have the knowledge of, the asset class, and you'll say, I feel it will go up, I feel it will go down, or and you sit by your computer all day. So I'm more of a fan of stock investing for the long term rather than stock trading. And if there's one last thing to touch
Yeah.
on in this episode, I think we've gone through all that I've written down. Apart from a key, I would say, stock market investing strategy, I wrote down dollar cost averaging.
Mhm.
So, Barry, do you want to
Oh
tell us
yeah.
what dollar cost averaging is? I think it's something that our listeners should consider, especially if you are just getting your feet wet in the stock market. So, dollar cost
Yeah,
averaging.
absolutely.
So,
So
Barry, to you.
I'll just I'll I would it's just basically investing regularly. So if you have, let's say, $1,000 to invest, instead of putting it all in at once at one given time, what you want to do, or what dollar cost averaging is, investing very small amounts at regular intervals over a period of time. And so one is fixed and is very consistent till you invest the entire $1,000. Why you want to do that is this: because the market is always moving. So you want to take advantage of different swings in prices. So let's say the price is high today, is low tomorrow. On average, your average entry will be better once you invest like over a period of time, small amounts over a period. So it could be $100, maybe 10 every month till the end of the year or something like that. That's just like an example, not exactly that way. So what happens is, if the price is 150 today, you buy 100 at 150. If it's 140
Right.
the next month, you buy 100 at 140. So when you do your your average of your entry, you see that you've gotten you were in a long term will have gotten a better price entry on average for that stock, instead of just going all in at once at one given period of time.
Awesome. Brilliant. I think that you've touched on it all. And yeah, I said something. Did I say it in the last episode about me wanting to be a speaker now, speaking on personal finance and that? So in the first talk that I had this year,
Yes, I
I
remember.
I, I had this table where I did the monthly return of the S&P 500, and I just put it up now, and the S&P
Mm-hmm.
500 actually was in the negative for 3 out of 12 months. So what happens is that if you adopt this dollar cost averaging philosophy, I mean, and you invest, let's say, once every month, you get exposure to, although you get exposed to the bad, but you are not that person that, let's say, you just came into $10,000 and you just invest it in April when it went down 4%. Then you are like one of the unlucky
Yes.
investors in that case. But if you invest gradually and periodically, you get to ride the highs and not get too negatively impacted by the lows. So that is what
Much of the lows.
dollar cost
Yeah.
averaging does for you.
So yeah, exactly. Yeah, it's essentially, helping you hedge against the risk that BE said that you can't time the market. So
You
you
can't.
go gradually, periodically. Yeah.
Awesome. So we've
I
come to
think
the end
I
of
think this was a
episode
great one.
5 of Chasing the Bag podcast with Bade and Biyi.
Yes.
We thanks for listening. If you've
Yes.
listened this far, try to subscribe and follow us on YouTube, Instagram, where else? TikTok. Listen to us on
TikTok.
Spotify,
I think
Apple.
we're on Twitter too, but our Twitter is not active.
Yeah, Twitter is not active at the moment. See, so handling social media is a career found.
It's a lot
Handling
of
social
work.
media is a career. But yeah, but Instagram, please send us a message on Instagram, and we'll be sure to, if you have a question, we're sure to respond on the podcast. And yeah, we'll do that. So, Buddy, any final words from you?
Yes, just like we said, you don't, go into the market or invest based of anyone else's, decisions or sentiments. You do your own research and you always ensure that you dollar cost average. I think those are two key learnings from this episode, that if you take any two things away, GI and DCA, I think they will be helpful for any beginner who is, trying to test the waters with investing in the stock market.
Awesome. Closing words from me. This just came to mind. Don't panic. If you put $100 in the stock market today, say, and it goes to $80 or goes to 90, don't panic. Don't worry.
$10.
Don't panic. Say, my money is going.
It will
Don't
come back
worry.
up.
Don't panic. All right. Thanks for listening, guys.